Welcome back to the channel. Today is March 26, 2026, and Meta platform stock, ticker Meta, just dropped 7.96% in a single session. This move caught a lot of investors off guard. So in this video, we're going to break down exactly what happened, what Meta actually does, where analysts think the stock is going, and whether this could be a buying opportunity or a warning sign. Let's start with why the stock dropped so much today. The sell-off was driven by two major developments. First, Meta is facing serious legal pressure. A jury recently found the company liable in a social media addiction case involving harm to young users, and Meta was ordered to pay about $375 million in damages related to child safety violations. This ruling has raised concerns that more lawsuits could follow, potentially leading to billions in future liabilities and stricter regulations. Second, Meta confirmed around 700 job cuts as part of a broader strategic shift. The company is reallocating resources away from its Reality Labs division, basically its metaverse efforts, and doubling down on artificial intelligence. While that might sound like a smart long-term move, investors are worried about execution risk and, more importantly, the massive costs associated with this transition. Now, if we zoom out and look at Meta stock performance over the past few years, the picture is actually much more impressive. Over the last 5 years, the stock is up roughly 95%, significantly outperforming the S&P 500, which gained around 63% over the same period. Over the past 3 years, Meta has surged about 168%, rebounding strongly from its 2022 lows. However, over the last year, the stock is only up about 10%, showing that momentum has slowed recently due to rising costs and now these legal concerns. So what exactly does Meta do? Meta is a global technology company focused on building platforms that connect people. Its main business is what it calls a family of apps, which includes Facebook, Instagram, WhatsApp, and Messenger. This segment generates about 99% of the company's revenue, primarily through digital advertising. Meta uses advanced algorithms and AI to target ads very precisely, which is why its platform is so valuable to advertisers. The second segment is Reality Labs, which focuses on augmented and virtual reality products like the Quest headsets, along with building the metaverse. This division has been losing billions of dollars annually, which is one reason investors have been critical of Meta spending. More recently, Meta has been heavily investing in artificial intelligence. The company is integrating generative AI into its ad systems, content recommendations, and business tools. This is a key part of its long-term strategy, but it's also very expensive. Now let's talk about analyst price targets. Despite today's drop, Wall Street remains surprisingly bullish on Meta. The average 12-month price target is in a range of about $861 to $865 per share. The high estimate goes as far as $1,144, while the low estimate sits around $676. Looking further ahead, some projections to the end of 2026 suggest the stock could trade between roughly $454 and $555, depending on how these risks play out. Overall, the consensus rating is still a strong buy, with dozens of analysts rating the stock as a buy and virtually no sell ratings. So how does the valuation look? Right now, Meta is trading at a price-to-earnings ratio of roughly 21 to 25, depending on how you measure it. That's actually below its 10-year average PE of about 28, which suggests the stock may be undervalued compared to its historical levels. Some models estimate a fair value around $756 per share, which would imply upside from current levels. Compared to other big tech companies, Meta's valuation looks relatively reasonable, especially considering its strong profitability in the advertising business. So the big question, is Meta still a buy? The bull case is pretty straightforward. Meta's core advertising business remains extremely strong, with revenue growth of around 22% year over year. Its investment in AI could further improve ad targeting and efficiency, potentially driving even higher margins in the future. On top of that, Meta has started returning capital to shareholders through dividends and continues to invest in growth areas that could pay off long term. But the bear case is just as important. Meta is planning to spend between $115 and $135 billion on capital expenditures in 2026, largely focused on AI infrastructure. That's an enormous amount of money, and it could significantly impact free cash flow in the near term. Investors are also worried that this could turn into another situation like the metaverse spending, where returns take much longer than expected. Let's also go over the key risks. Number one is legal and regulatory risk. Today's ruling could be just the beginning. If more lawsuits emerge or regulators step in, Meta could face massive fines or be forced to change how its platforms operate. Number two is execution risk in AI. While AI is a huge opportunity, it's also highly competitive and expensive. There's no guarantee that Meta will generate strong returns on its investments. Number three is competition. Platforms like TikTok continue to compete aggressively for user attention and advertising dollars, which could pressure Meta's growth. Finally, a few additional things investors should keep in mind. Meta is undergoing what some are calling an efficiency pivot. The company is restructuring teams, cutting costs, and focusing on AI-driven productivity. The recent layoffs are part of that broader strategy. At the same time, Meta has introduced its first cash dividend, signaling a more mature approach to capital allocation while still investing heavily in future growth. So to wrap this up, today's nearly 8% drop in Meta stock is a combination of legal challenges and strategic uncertainty around its shift to AI. The long-term story is still intact, but the risks are clearly rising. Whether this is a buying opportunity or a sign to stay cautious really depends on your risk tolerance and your belief in Meta's ability to execute its AI strategy. Thanks for watching. And if you found this video helpful, make sure to like and subscribe for more stock analysis and market updates. I'll see you in the next one.